Morning, Greg here with a market update. Okay, so it is no surprise that the market at the moment is focused on one thing and one thing only, and that is what is happening in the Middle East with the war between Israel and Iran and how that is developing. So the big question at the moment is the US about to enter the war and support Israel. So there has been a lot of noise in the last 24 hours that it is highly likely that the US is going to join the war. We saw Trump leave the G7 meeting early. He has gone back to the States. He's had meetings with the National Security Council. And he's also been very vocal. He's been tweeting a lot, talking a lot, and he's been basically saying that Iran had the chance for diplomacy and that it didn't want the deal. He's told the citizens of Tehran to evacuate immediately. Israel state media, even this morning, is basically saying is that they expect the US to be joining the war in the next 24 hours. So what does that all mean for the market? Okay, so we have a very nervous market at the moment. We've got a market that is trading, risk off. So we are seeing, some softness in equities. We saw US equity indexes, S&P, Nasdaq, closing around, down 1% overnight, and reopening at the moment a touch lower again. Look, these at the moment certainly still aren't big moves. I would say that at the moment, in the equity space, that they have been, orderly moves. But certainly, if things heat up, it could get disorderly very quickly. In currency space, we are seeing safe haven flows go into the US dollar. So anytime, we have, a crisis, a global crisis, we see money, we see the flows go into the US dollar. So no surprise there. So in the short term, while this is all kicking off, I would certainly not be selling the USD, as USD certainly bid. The other market that we're seeing at the moment that obviously is reacting probably the most is crude oil. It has been super volatile. Very, very hard to trade because it's had some big retracements, but certainly it's back up trading around $75. And I would say that if you are trading, the key market to watch 100% is crude. If crude, for whatever reason, does have a big spike, and we're talking about a spike up towards $100, and God forbid if it went above 100, then you are going to get some very big risk off trading. So risk is going to follow crude, and certainly higher crude, and the higher it goes, the more bearish it will be for markets. So keep your eye out for crude. Gold, it's a touch confusing at the moment. When it opened on Monday, we did see a rally up to 34.50, but it seems to have found good resistance at that level, and it even fell as low last night, retracing down towards 33.70, just below. So lost a good $80 from those highs. It is opening Asia at the moment around that 33.90 area, retesting 3400. But yes, a bit surprising that gold has not spiked up on this news at the moment. It may be a case that the market is heavily positioned long gold, and so we're just seeing maybe some of those weaker positioning being washed out potentially before we see a spike. But the market is being a little bit patient, I guess, just waiting to see exactly what happens next in the Middle East. And obviously, the more it escalates, then obviously you don't want to be selling gold. It will spike. Okay, so in other news we have had in the market recently, Bank of Japan came out yesterday. No surprise, no rate hikes by the Bank of Japan. They are the only central bank globally that is still on a rate hike path. But they were dovish, Bank of Japan. They they don't want to be raising rates anytime soon, and so that market is now looking at pushing back the next rate hike, early next year. So certainly that is not going to help the yen. That's a sell yen story, and yes, we have dollar yen, trading above 145. So dollar yen certainly was supported by that BOJ meeting yesterday. Tonight in the US we have the all-important Federal Reserve, so the Fed meets. Again, no change is expected as far as rates are concerned, but we do get the dot plots. We get them once a quarter. They are important. It's where the Fed members map out where they see the Fed funds rate, Fed's interest rates over the course of the next year. Look, the Fed has been on hold. They have been on hold because they are still trying to see what the impact of tariffs are on inflation. Now they've got a crude problem, that now the crude is going up higher, that is inflationary. So that's complicating matters again. Now with those dot plots, there's a chance that the Fed members may only pencil in one rate cut for the end of 2025. Market is expecting, pricing in at the moment, two rate cuts, one in September, one in December. So if we get a dot plot with only one rate cut by the Fed members for the end of the year, certainly that's going to look hawkish. That will also mean good things for the US dollar. US dollar is certainly like that, and potentially equities on a hawkish Fed will trade softer. So certainly tonight we besides the war, market is certainly going to be watching how this Fed meeting translates. But look, just lastly, these markets are dangerous markets. I've said this before, you do not know when the next headline's going to come out. So things can change on a dime very quickly, can gap, very volatile markets. So position sizings probably, suggest is to keep those lighter, so you can keep your stops wider. And good luck with your trading, and we'll catch back in with you shortly.